So imagine building a $1 billion company and suddenly SEC steps in and says to you that you are breaking the laws. Somewhat similar happened Ripple in December 2020. The US Security and Exchange Commission sued Ripple. Their claim that Ripple sold $1.3 billion of XRP as an unregistered security. In simple terms, SEC argued that XRP is somewhat similar to stocks and investment contracts that private or public companies sell to investors, while Ripple still maintained its stance, stating that XRP is still a cryptocurrency. This created one of the biggest legal questions in crypto history. Are crypto a security or not? Now, to understand it, you need to understand what are securities. A security is an investment where people put their money in expecting some kind of profit in return. And these profits are usually driven by the efforts of others. For this, the SEC applies a test called Howey Test to identify a particular asset is a security or not. If an asset falls into the Howey Test, it must be regulated as a security. If a particular asset falls into the Howey Test, the SEC states that it must follow security laws. The Howey Test comes from the US Supreme Court, where they have clear defined rules to identify an investment contract. The Howey Test looks at four critical factors. First, whether there is an investment of money. Second, whether the money is invested into an enterprise. Third, are there any reasonable expectation of profits? Fourth, whether the expected profit comes at the effort of others. If all these four conditions are met, usually according to Supreme Court, the asset falls into securities. In context of crypto, these rules becomes a bit complex. Even though crypto is sold initially as a security, over time it performs as a decentralized asset. That's exactly where the much of the legal debate lies. Ripple strongly pushed back on this idea and fought back for almost 5 years to win the case. During the whole case, there were a lot of twists and turns. In such scenarios, the XRP holders suffered a lot. The XRP as an asset was completely under pressure and suppressed. Then there came a major ruling in 2023. It stated that XRP sold to the public via exchanges was not securities, but XRP sold to institutions were considered securities. The split decision surprised the whole market. It meant that the XRP sold to the retail investors were not affected, but XRP sold to the institution was still considered as securities. After years and back and forth, the case was settled on August 2025. Ripple has to pay $125 million as a fine, and the case was dropped from the both ends. During early years, especially in 2021-22, XRP was heavily suppressed due to the fear of its being ruled a security. A lot of major exchanges delisted XRP, fearing that Ripple will lose this case. That was actually the time when I invested in XRP. My reasoning was, even though market dynamics are against XRP, but if the outcome turns in the Ripple favors, the upside is unlimited. And something similar happened in this cycle. As XRP had no pressure from the case, in 25, we saw that XRP rallied. It was one of the most outperforming coin in this cycle. If you go back and see, at that point, everyone thought that XRP will lose this case. And many of the influencers believed that it would be termed as an security and will be removed from the exchanges. But from my perspective, it was not about XRP. If XRP is termed as a security, then all the altcoins are. Because all the altcoins are not something different from what XRP is. In such kind of scenario, not following the crowd benefited me a lot. This case was not just about Ripple. It became a blueprint for the crypto regulation. Before this, there were no clear rules of how to regulate crypto and how it should be classified. The SEC essentially tried to use the already existing security laws for a new asset class. Today, this case is considered as one of the most important regulatory battle in crypto history. So the real question here is, was Ripple unfairly targeted by SEC? And did the SEC simply try to protect the investors? What do I think about it? I don't think Ripple was unfairly targeted by SEC. In my view, Ripple identified a loophole in the system and created a cryptocurrency token to sell it into the markets. In that process, the primary beneficiary was the company. The real downside were borne by the investors who bought the coin without any guaranteed value, while Ripple generated a significant amount of capital from the sale. The average investor was exposed to uncertainty and risks. Because of that, I don't believe that Ripple was fighting for the rights of small investors. This might differ from what people say in crypto sector, but if I look it at objectively, I believe what I said. No corporate entity will operate for the benefit of the public unless they can extract profit from it. Even when narratives are presented in such a way that suggests otherwise, that's why it's important to maintain a skeptical and analytical view of such kind of situation. That's was something worth thinking about. See you later.